And good morning. Welcome to Cracking the LTC Code. I'm Louie Hillman, Senior Life Specialist here at ECA Marketing, joined by our President, Joe Spillman.
Morning.
No Shave November, apparently.
Yes, sir. You got to do it every November.
And Jeff Thompson, founder of Quantum Marketing System.
Hey, everyone. Welcome. And we're excited to have you here today.
Yeah, absolutely. Yeah, absolutely. Really excited about the content and the presenters that we've lined up for this week-long series of presentations. Just a couple quick reminders. So a lot of you are listening via webcast, either at your computer or maybe you're driving to an appointment. This morning, apparently only this morning, you can actually watch us live on our Facebook page as well as our YouTube page. Jeff, how would somebody get on those to watch this and actually see our ugly mugs in person?
If you know who ECA Marketing is and you've been following our page or have subscribed to our YouTube channel, you've been notified that we're actually live streaming this event, this first session or first segment. If you have not yet registered for the entire series, you'll want to go to crackingtheltccode.com and actually register for the GoToWebinar access, so you'll be able to watch everything else that comes up all week. So just this first 30 minutes is actually live stream.
All right, so if you're listening and want to see what Joe's beard and mustaches look like halfway through November, get on our Facebook page or YouTube page. And a lot of people have asked, because one
more thing, we're actually going to post a link below the live stream. So if you don't register while we're actually doing this, we're going to have a link there so you can just click on that and register for the remaining segments.
Certainly they can call in and talk to any of their marketers that they're used to working with and get instructions.
Yeah, if you have any questions, that's the easy way.
Yeah, and a lot of people are going to have other commitments during the week. We'll be recording everything. So if there's a presentation that you were excited to see and aren't able to join us, there's a way able to watch that replay.
Yep, we'll have that all set up. So a couple other things. As we go, each session is going to have some free stuff, tools, documents, things to help you actually implement the sale of long-term care, asset-based long-term care solutions for your clients. We're going to actually have a landing page set up where you'll be able to go and download all of that. For all attendees, we'll send that out after the fact. So just be aware that you don't have to scramble to try to get those. Just make sure you've registered for the webcast, and you'll get access to that at the end.
So November is not only No Shave November, it is also Long-Term Care Awareness Month. Jeff, talk to us about why you think that it is important to put together this weekly summit of presentations, or Cracking the LTC Code. Why is this an important topic?
Well, I think the first big thing is that this is a huge risk for most clients, and it's a very large financial risk. So the average claim is probably about 360 or 360,000, somewhere in that range, per person. So if you have a couple, that's a pretty big economic hit if you don't have a good way to mitigate this risk or transfer this risk to an insurance company. And as it is right now, a lot of advisors aren't having these conversations. So we hear a lot from agents that focus on the long-term care market that they're constantly running into folks that work with a financial advisor, and none of this has been brought up. We also feel that there's a potential big liability there for the advisors that are not talking about this to their clients. So some of you got our email that invite to bring you to this event this week, talking a little bit about why that potential risk is something that you need to start showing this stuff to your clients to mitigate that risk. We're actually going to give you an opportunity to get some tools to actually help you do just that throughout the week here too.
And you're talking about, the horror story is kids going after the financial advisor, right? Because the financial advisor didn't do long-term care planning with their parents.
Never brought it up. Yeah, never brought it up. So it was just a big vacuum in their planning, a big hole that costed them, a massive amount of their wealth being transferred. So
why are financial advisors reluctant to talk about long-term care planning with their clients? Why is it something that has been, largely unaddressed?
I think it's because it's difficult. It's complicated. It seems daunting. It's like life insurance. There's underwriting. People get declined. Joe, maybe you have some.
I think there's maybe even more to that in the fact that the traditional long-term care market, as we all know, has changed so dramatically over the last 10 years with, we all talk about the horror stories about premiums doubling on an annual basis sometimes.
Right.
Carriers reducing benefits for consumers on a pretty regular basis. Frankly, a lot of advisors that did do a good job of planning with their consumers got themselves in trouble with those consumers because they look bad because their premiums doubled and their benefits are being reduced. So it's almost one of those subjects where a lot of people just would rather keep kind of underneath the rug and not even bring it up with their clients. But I mean, frankly, the way I look at it is we're in the safe money world business, right? We help educate consumers about safety nonstop. That's what we do every day, all day. We talk about that insurance risk, transferring that risk to the insurance company off the client's table. And this is a big one. And this is one that I think that the timeliness of this is big because we have some evolving changes in the LTC protection world, both on the asset-based long-term care, the traditional life insurance sale with LTC riders on there. And we've got some ways to give clients guaranteed protection policies where we don't have to have that risk of increased premiums or decreased benefits. So I agree. I think the timeliness of this is perfect. I'm really happy that we're able to present this to our audience out here today. That's sweet.
Massive demographic thing too. Obviously, baby boomers are hitting 65 on a daily basis in huge numbers. And they're thinking about this, but if their advisor isn't, guess what? That's also a risk that you could lose your client to someone else that is talking about this stuff. So it's important to protect your existing client base and also protect against potential liability and solve a big problem that these folks are facing.
And if I'm a financial advisor and I've sold a traditional long-term care policy that doubled in premiums, right? That is agitating for the client and it's uncomfortable, right? So you say, well, why would I keep selling something that, frankly upsets my clients and makes them mad at me?
Yeah.
Now, the financial advisor isn't the reason the premiums are doubling. It's because the industry had a lot of mispriced policies, but then the financial advisor just takes it off the table. They don't want to have conflict and friction with their clients, so they just don't recommend it.
Well, I think another big part is, as I stated earlier, because the industry is changing so much the last 10 years on LTC protection, so have the products. It's really hard for an advisor out there in the street to keep up with all the product changes and the evolution of all these different product changes. I mean, it's a totally different world now than it was 10 years ago when ECA first looked into offering long-term care solutions. It was traditional long-term care policies like with Allianz or Hancock and carriers like that. A lot of those guys just aren't doing it anymore. I mean, we all seen carriers come and go in the LTC market because the pricing is so challenging for those carriers to figure it out. That I would say a big part is why advisors aren't talking to their clients about it. It's just keeping up with the changes and what products are even good. And that's what our specialty is. I mean, you guys know this from in the field on the fixed life and the fixed annuity side that we specialize in making sure we have the best products available for our producers to sell consumers. But what you spend most of your guys' day on is educating producers on where those products are and what those products can do to help their consumers. So again, I think it's just perfect timeliness to have this conversation with everybody live on Facebook or whatever we're doing here.
Now, of course, there's still a place for traditional long-term care products, but
For sure.
just the framework of that industry is probably best emphasized by the number of carriers. I know you've got the stat within the last couple of years, it went from 100 some different.
Probably about 150 different carriers down to about 15. We're actually going to hear from an LTC expert, the first presenter after we get past this intro here, who's going to give you kind of a update on the status of the market and what's been going on, where it's headed. But yeah, that's a huge and telling kind of statistic in that carriers are really having a hard time staying in the long-term care market space. Many have gone, in and out really quickly. Some of the biggest players in the industry are having some financial issues because they didn't price right. So the innovation that's come about in using hybrid products with life insurance or annuities have really solved a lot of the issues in pricing, making sure that we're able to offer something that's going to be there when the client needs it instead of something that prices them out because that premium has gone up double or triple or quadruple.
Yeah.
And anyways, I think it's the goal of this whole program this week is really to show you what the gamut of solutions are and how simple it actually can be to offer this stuff to every client that you meet with.
Exactly. You mentioned we've lined up with lots of different friends in this business to provide our producers with tools to help that be an easier conversation,
right? And
something they don't have to be afraid of. They can pull it off from underneath that rug and have that conversation with their consumer to see if it's fit. And I think clearly we know that not every product is a fit for every consumer. But what we do think at ECA is that you should definitely let your consumer know what is available to them and then go to them, make some advice together with the client, make a decision that makes sense for their financial picture.
Yeah, I know there's some LIMRA statistics that 70% plus of life insurance sales now include some sort of living benefit. So that value that is being included with a policy that provides guaranteed premiums and guaranteed benefits, not only death benefit, but long-term care protection, is a key reason people are buying permanent life insurance.
Yeah, it changes a little bit on the spreadsheeting. Sometimes it might not be the absolute cheapest product available out there. It might be the third or even fifth cheapest, but it's got those living benefit riders on there that make sense. And every rider's different too, which is one thing that we've all talked a bunch about, whether you have an indemnity or if you got to submit receipts for reimbursement. I mean, it's really a matter of educating from our perspective, educating the producer on the differences on those policies. And then it's on the producer to educate the consumer and let them come up with a decision. Great. Perfect.
Yeah.
I expected.
Yeah.
And on the annuity side too, we do the exact same thing on the annuity side. You've got lifetime income benefit riders that have some LTC protection, some don't. It's just a matter of trying to get together and be educated on what's available and then have that conversation with the consumer and come up with a decision that makes sense, again, for the financial picture.
And I can just speak from, my seat managing my book of business that almost weekly I get a statement from an advisor with a client that had a 50 to 100% rate increase on a traditional long-term care policy, and they're asking me for options and help. And, a lot of times it's too late for that client. We can't put them in a better position, but having conversations with advisors to educate them that this is something that could have been addressed 5-10 years ago, that you could have locked in guarantees on the client's premiums and benefits, is oftentimes I find an option the advisor wasn't even aware of.
Well, and for advisors that are selling life insurance now, these living benefit riders are actually doing a lot to drive the sale of life insurance. So people might not necessarily be as excited about a death benefit as they are about a living benefit that covers that big risk of long-term care claim.
Well, that's easy to understand. I mean, just by nature, humans are selfish. Whether we admit it or not, we are. What's in it for me? Well,
Yeah.
Life insurance is the most selfless purchase a person can make, because you're getting nothing typically out of that life insurance sale. You're just passing some wealth on to his children or the estate or whatever. Well, if you add a living benefit rider to it to know that you're going to get something out of it potentially, if you get a long-term care situation that comes up, or even a lump sum value if you become critically ill, that's where these benefits are pushing life insurance sales. And frankly, that's kind of the big driver of life insurance sales in the industry. For the last 5 years, have been these living benefit riders. So the other point that I want to mention, I think can frustrate producers away from selling these, is underwriting challenges.
Yes.
And I'm sure you have a segment that's going to talk specifically about some of the different underwritings. This makes sense for a presentation like this.
Right.
But I think that there are some solutions out there that are simpler underwriting than people might expect them to be, that is important for us to understand with our producers as well.
Yeah, absolutely. I like the phrase, life insurance you don't have to die to use.
Yeah.
Right. So it's speaking to your point that people are thinking about what is in it for me. Now they get the added benefit. If they don't use it, they still have a death benefit to pass on to their beneficiaries. So there's no use or lose it, which is a very common objection with traditional long-term care. Most traditional long-term care policies have, like car or homeowners insurance. If you don't use the policy, you paid for no benefit.
Mm-hmm.
Right. Yeah. And that's the one thing I think that's also driving the sale of these hybrid policies, is that they are win-win-win. There's really no scenario where the client isn't going to benefit. So either their heirs benefit in terms of the death benefit. Many of the products might actually have all the cash that they put into it to pay for it, so they can access that if they needed to, as well as the accelerated benefits for long-term care. So it really is a win-win-win for the client. There's no scenario they don't come out ahead.
Awesome. Joe, obviously you as the president of ECA Marketing have embraced taking resources, taking Jeff and I away from the phone, actually selling today, to put on an educational event like this. From your perspective, why do you think it's so important? And have you seen a growth in our business since ECA has really started promoting these kind of hybrid policies?
Yeah, I mean, look, it's a cyclical business that we're in. You see different sales trends, certain sales concepts trend, and certainly today it's a long-term care trend on the life insurance side specifically. But again, we're seeing a lot of that on the annuity side as well. Again, carriers are becoming creative with products. It's interesting with LTC. I've been at DCA now for just over 20 years, and from the very beginning, we had a outlet for a traditional LTC type sale. We never really got our head wrapped around the traditional LTC sales, frankly, because we're busy selling annuities and life insurance. But in that world that we play in, we run across long-term care sales all the time. I had come up with a presenter in the LTC space, I really liked what he said. Again, I don't think every consumer in the world should buy an LTC policy. I also don't think every consumer in the world should buy a life insurance or a fixed annuity policy. But I do believe in my heart that us as advisors have an obligation to the world that we fit in, that we should educate them about what those products are available for them. Certain consumers want to take that risk on themselves, right? They might be multimillionaires and they say, if I go into LTC facility, I'll just pay for it. I'll pick the one I want to go to. I'll do it my own way. I don't want to follow the insurance contracts rules on letting me go to the facility I want to go to or whatnot. But I still think that consumer should understand the products that are available for them and see if it is a fit for them, just like guaranteed income. I think that every consumer should understand that guaranteed income is available for them out there. Doesn't mean I think everyone should get it. It just depends on their risk tolerance when you talk about that side. Some consumers want to stay in the market. They don't worry about the risk. Some consumers are deathly afraid of the market and they don't want any risk. So to give them a guaranteed solution for income, again, it's not for everyone, but I think everyone should understand their options. LTC is one of those things where all of us in America today either have had a very personal experience like myself with my grandma, or we know of someone that did. My grandma's experience was she lost everything to long-term care. Every dime that my grandma and grandpa had created in wealth, every dime of that, and it wasn't much, by the way, they were blue-collar farmers, they lost everything to a long-term care facility at the end for grandma. Luckily, she had a really great experience in a great facility, but guess what? It's not free. Medicare wouldn't pay for that sucker. We had to have the money to pay for that facility for a X amount of time before they'd even allow her to go to that facility.
You probably got to make a down deposit.
Yeah, well, they needed basically a collateral assignment type thing against her bank account. Now, I don't know if that's the right term, so don't quote me on it, but they basically needed to see she had X amount of money to pay for X amount of time. And guess what? How much time that was? Longer than she was expected to live. They wanted to make sure they were getting paid the big dollars. Once the big dollars kind of ran out, if she became broke, which she did, then the Medicaid facility or Medicaid would pick up the rest of the cost for her until she passed away. So we had a very personal experience, and because of that, and again, most of us in America today have had an experience like that. I want to make sure that we're showing our consumers what's available for them, because if she could have had a policy, again, by the time I started getting into this space, and like most people, they don't listen to family members, especially their grandkids. If she would have had a policy, she would have had a lifetime of benefit, and we could have preserved some of our other assets to pass on to her children. Didn't happen again in this situation, but we were lucky enough to be able to find a place for grandma that was wonderful, and that she got to live out her last days in that facility. So for me personally, I look at my experience, and frankly, mine wasn't traumatic. I've talked to advisors all day long about very traumatic experiences when it comes to the Medicaid and the LTC spend down process that have ruined just lots and lots of dollars. I'll just put it at that. Probably not millions, because most millionaires are going to have something left. I mean, unless of course you get Alzheimer's or dementia and you're stuck in an LTC facility for 20 years. Typically when they go into a long-term care facility, the average is what, like 3 to 5 years of life left?
It's probably closer to two years.
2 years.
24 to 26 months is probably the average long-term care event.
Yeah, which is interesting because my grandma made it 3 years.
Yeah.
And so the norm is that they go in and they have to have that protection for that amount of time. But certainly we've all heard horror stories of catastrophic situations where they've lived in the nursing home facility for 20 years. And if frankly, they could have had a lifetime benefit pool to help pay for that. Again, it's not for everyone. That's not what we're here for at ECA. And we haven't been from the beginning. We don't think everyone should put all their money in life insurance. We don't think everyone should put all their money in annuities. We also don't think that everyone should have to purchase a long-term care protection policy. But I'll get on my soapbox all day, every day, and say that you need to educate your consumers about what's available out there in the LTC space. And what's driven ECA into it, frankly, has been the market change. And the market change has been is LTC has gotten more into annuity and life insurance. We haven't chased LTC. LTC has crept into our world, and we spent just, frankly, a couple of years of time and education and some money, and we have seen our LTC type sales probably double every year in the last 5. If we're honest, it's sometimes hard to look at that math on what the sales are. Certainly, we know our asset-based single premium long-term care sales products like MoneyGuard, like One America, like Minnesota Life. I don't want to miss anyone out, but there's another handful of carriers out there I didn't mention. We have legitimately seen those type of sales double every year for the last 5 years. And frankly, I think we've just scratched the top. It's just the tip of the iceberg. I think there's a lot more of those sales that should be being sold out there that we're not for some reason educating our consumers about it. So we want to be able to help provide our producers with the tools to allow them to do it because we think it's so important.
When the industry is changing so fast, I'll have advisors actually ask me about products that, they maybe sold 5 years ago that they think that is the main asset-based LTC product today. And said, yeah, well, that product's still available, but it's, no longer close to competitive. And that just shows kind of the shifting landscape of products becoming more innovative, more carriers offering alternatives. So, I guess one of the things that I would just hope people take as a call to action is take time to educate yourself, because that product that you sold 5 years ago for that one asset-based long-term care policy that you sold probably isn't the best solution today. The industry has changed very rapidly.
Yeah.
So I actually just want to take real quick Joe's personal experience and ask Jeff. Jeff is the founder of Quantum Marketing System. One of the biggest things that he is working on is helping advisors with the psychology of selling. Something I heard in your your conversation about your grandma's experience is just the personal impact. Jeff, advisors that are out going to start promoting long-term care planning and start implementing this practice into their practice, how important is it to be talking and sharing stories versus just selling product?
Stories sell. So that's a critical piece of the engagement with any consumer, is to have a real experience that you can relate. Now, many people have had that. I also have gone through that with great grandparents, also farmers, also the nursing home got everything, and some of them actually did have quite a bit of assets. So when you have two go into a nursing home for an extended period of time, it's a big claim. Mm-hmm. So yeah, absolutely, relating real stories is a huge key to engaging people, because they probably had this happen somewhere in their life as well.
I mean, this sale specifically has to be one of the most emotional sales for people to make a decision on, because it is devastating for families to have a long-term care event, just having a family member suffer through something like that, but also the financial impact that it has on them.
There's a financial impact, plus, when we look into research on caregivers, there's a ton of research that shows that they're putting in, a lot of their own time in trying to help care for this individual, and that might be giving up hours at work, or, making their day, run from 10 a.m. until midnight to try to squeeze everything in, still work at the job.
Yeah, and it's
a lot of pressure on those caregivers.
Yeah.
When the parent doesn't have a policy like this in place.
And I know a couple of personal friends that have, one of the two have given up their job to be able to care for mom or dad in their final years of wanting to stay at home.
Yeah.
And what's interesting about it is we're not asking them to give that up. A lot of people want to be able to be at home and care for mom and dad at the end. What we're saying is that if they were to have an LTC type protection, there'd be some money to help them in those years.
Process, yeah.
Because it's such
an indemnity type.
The stress alone of making sure that mom or grandma or whoever it is getting into a good situation, a good place to be is enough. But the emotional stress of that alone is taxing on a lot of people. But imagine with no money to help pay for any of those options,
right?
Versus having some money to help pay for options where the family can sit down and together and make that decision. Not necessarily strictly on a financial basis, but in a best care situation basis is what's critical, I think.
Well, and this is a big area too, where the federal government is basically saying, we're out. We're not in on this. You guys are going to have to figure it out for yourself. So as advisors, you're the people that are going to really help save the country in terms of this huge wave of people needing this care by getting these policies in place for people. It's a great financial opportunity, but it's also a great opportunity to help kind of shore up and do meaningful work by making sure your clients are well positioned for a claim. So,
yeah, I mean, look, the Medicaid program is already in trouble, and we haven't even had the baby boomers go through it for the most part yet. Imagine when all those baby boomers go through that Medicaid program, which already is in financial trouble,
right.
All that's going to look for the system.
Right. It's going to put a lot of stress on it. So hopefully you guys are going to stay engaged for the whole week. We have a lot of great training coming up. In fact, our next presenter is really going to give you some great insight into the state of the industry and where it's headed. We want you to make sure to stay tuned, because every session you attend will actually get you an entry into a drawing to win an iPad. So we're going to do a drawing actually on Facebook next Tuesday, Facebook Live. So for those of you who are here the most, you'll actually have the greatest opportunity to win that iPad. And we're giving away some free swag throughout. So tune into each session. I
see some golf shirts and some golf balls over there. Is that the swag bag?
There's more coming. Yeah, there's everything from Yeti mugs to a variety of different things that carriers have.
There we go. We got some Provies.
Yeah, you can grab a Yeti out of there if you want. So we have some fun stuff. Just keep it interesting for you guys. I think the content is going to be really valuable and useful for you and your clients. We really want to recruit you into this mission of helping clients get some sort of a long-term care plan in place that really takes this risk off the table. Because as you're going to learn about as we go here, we have a neat little tool to actually help you go through a sales process called The Risk is Real. And we really do believe this is a significant and real risk for your clients. So, Joe, before we get on to the next session, we have about 4 minutes left of this one. I think people may not be familiar with ECA marketing. They're on the webcast here today.
Yeah.
So maybe just give them a little background on who we are and what we do.
Let me just start by saying thank you. I know a lot of people on these calls this week are going to be producers of ECA already, and thank you very much. We're having a killer year, backed up by a killer year last year. Our sales are increasing dramatically. As FMOs, BGAs, we fight over business with our producers. We try and show value to those producers, get them to want to do business with us. And certainly at ECA, one of our value props, if not our best one, it's darn close, is the service that we provide to our producers. And I like to state this in headcount. As you guys know, we have 50 employees here, and it's almost exactly 25 salespeople and 25 administrative people. We help process business for producers every day, all day, at a level that our competitors just frankly don't do. We're on the phone with our producers on a daily basis, on the phone with underwriters, with new business managers at the carrier level, actually helping get things done. If you've never done business with us, of course, it just sounds like a sales pitch. But for those of you that have done business with us, I think everyone would agree that we go above and beyond. I spend a lot of my day personally helping get stuff done as the president of the company and helping get stuff moved to the next step. One of the unique things I think that you will find in doing business with ECA, and again, if you have, you probably see us ready, is we are educational mindset marketing company. We spend so much of our time, and you guys probably get annoyed by me at times because I consistently and continuously ask you guys to help bring new ideas to our field force to make sure they understand what's available out there to show their consumers. That's what our marketing is always centered around, is bringing new ideas to our producers that they can show consumers. We don't do these big fancy glamorous trips where you get to go out there and rewards. We leave that to the carriers because for a couple of reasons. One, we really can't one up them. The carriers put on some spectacular trips and they're wonderful if you guys get to go on those. What we spend our time on is we have a conference training center in our home office here, and I think on average it's once every 3 weeks and once every 2 weeks we're bringing in groups of advisors to teach them new things. And there's so many different topics over the past that we have covered, including this long-term care one. And we've partnered up with a guy who I think is a presenter, Don Quante. You'll hear a little bit from him later because he frankly has seen so much success in putting this LTC hat on in his business place, and he's sharing those successes with producers at ECA basically all the time. I mean, we're onboarding reps to his program all the time, showing it, and that's where this Risk is Real brochure comes in that Jeff pointed out a little bit earlier. It's just a sales piece that helps you as an advisor get past the uncomfortableness of presenting long-term care, and some of those things are certainly what you're going to find at ECA, and it doesn't really matter whether you're talking about an advanced sales, life strategy, or the simplest fixed annuity like we had earlier this year with SBLI. 4% was guaranteed for 5 years. It was just a simple fixed guaranteed annuity, and we're able to always bring those to our producers. One thing also we kind of make sure we always have at ECA is the products that are out there. And I know that as wholesalers, you guys at times get frustrated because of product creep, but the truth is if we don't have the product, it makes us look bad, which is why we have currently, I think, 76 carrier contracts. It sounds like a lot, but one carrier might be great today, might not be great tomorrow. They might get out of the game or want to get into a different focus as a carrier. So we're always going to have those things available for you. And then the last note that I want to make is one thing that I demand at our company is that we're always friendly. And that's pretty easy being from Minnesota. We have this phrase that I like to use called Minnesota nice. We certainly are that here. I will tell you that throughout a year, I'll typically get about 30 phone calls from reps, and sometimes you hear about these, sometimes you don't. They just can't believe how nice we are. And to me, that's just common sense. We're trying to get your business. Why shouldn't we be nice? Well, I don't know what the other guys are out there doing that I generate this many phone calls, but the fact that we're out there and we're trying to help producers get stuff done in a friendly way is what I think they're talking about, which we're very proud of at ECA. So again, thank you for all the business that you do at ECA. Thanks for considering us in the future going forward. And I think that you can hold us to the fire on this. So we're going to continue to educate you on these different topics going forward.
And hopefully we show our expertise and earn your trust to give us a shot at your next case.
So that brings us to the end of this initial intro session to our week-long event here. Joe, you actually know our next presenter, Steve Kane.
I do.
You want to give him a little intro and we'll bring him on and turn it over to Steve?
So as I mentioned earlier, ECA has really never gotten into the traditional long-term care space and market, but we have a sister company in LTCI Partners out of Illinois who is partly owned by the same parent company that partly owns us, called National Financial Partners. They've made a space here. They've been leaders in the traditional long-term care sales space for years after years. Steve Kane and I have become personal friends because we travel together on a lot of these events. We spoke together at a lot of these different events, and there's no better person that I've ever talked to in my 20 years to share with you guys in the field about the traditional long-term care space. So thank you, Steve Kane, for your time today and your time for this presentation this full week. He's committed a lot of time to help us in this space, and we certainly appreciate that. So with that, I think we're turning it over to Steve Kane.
Yeah, Steve, you there?
Great. Yeah, guys, thank you for great setup, and I appreciate everybody's time today. I'm going to keep this brief and talk a little bit about the marketplace and some of the opportunities that you may see in it. And I think it's going to translate, although Joe mentioned that I've been focused on the traditional market.